Well, thank you so much for joining us today. It's Thursday. So glad to have you aboard. I'm Marlon Bowling, your tour guide to the ag commodities. And I am joined by Brian Hoops of Midwest Market Solutions to talk about the day's market driving factors. Well, it's Thursday, Brian, and so we got our weekly export sales numbers. Shall we take a look at them? And I want to see what you think about them. So let's bring them up here on the screen. And on the corn, we had sales last week of 1.71 million tons. Pretty good sized activity out there. Soybeans came in at 1.06 million, both of them over a million tons. Soy meal, 203,000 tons. You had soy oil coming in at 3,500 tons last week. And the wheat sales, well, only 156,600 tons this past week. Now, we also had sales totals for grain sorghum and cotton and rice. Grain sorghum, 12,500. Well, the bright spot of the news there is the fact that it was not a net reduction for a change. It seems like about 4 of the last 5 weeks have been going backwards on grain sorghum, but we actually had positive sales last week. Upland cotton, 170,600 running bales this past week. And on the rice, 16,400 tons. That was actually down 75% from what we had the week before. Now, Brian, the cherry on the top. We just got some new overnight export sales information, and it was a big sale of corn, not soybeans. It was corn this time, and the destination was China. 1.09 million tons that was sold, reported in the overnight sale. Now, I went to put about a six-foot asterisk on that because anybody that follows our commodity wrap show on Rural Radio Channel 147 heard you talking about 2 days ago about this, that there were rumors in the market that we had made a big sale of maybe over 1 million tons of corn to China. Okay, at that time, the corn market ran up, and it ran up yesterday, and it was up overnight. Now, here we have that situation, Brian, where is it one of those buy the rumor, sell the fact type things this time? We saw this happen here a week or two ago, and the market fell out of bed once the announcement came out. Do you think that happens today?
Well, good morning, Marlon. You know, that's been the pattern. The last 2 weeks, now this is the third consecutive week, we've had a large sale of corn to China. And both times prior to this, the corn market has fallen, like you said, kind of a buy the rumor, sell the facts sort of situation. Plus, you know, China's not just out here buying cash products at $8. They are hedging their needs early in the marketing year. So they have hedges in place, meaning long positions to capture this up. And when they actually capitalize on the cash transactions like they are now, that means they also sell those long hedges, and that puts some pressure on the futures market when they dump those positions. So it's likely that the corn market is going to pull back off of these highs here now that we have this rumor that's been floating around for at least 2 days, now confirmed by the trade, plus the Chinese sale coming in. But you have to look at some of the positive here too. We may pull back today, but we are taking a lot of bushels off of the open market. Our old crop sales for both corn and soybeans far and away exceeding what the USDA has forecasted for this current marketing year. And we're on a pace to just completely shatter those numbers. The USDA is going to have to raise their export numbers in the May supply and demand report. Our new crop sales for both corn and for soybeans have been very good as well. And part of that is because of what's going on in South America. The Brazilian corn crop there once was thought to be a really big crop, is now being downgraded because of drought-like conditions. So they've had a really tough growing season in South America. It's a benefit to our producers because that means higher prices, more demand for our U.S. commodities.
Well, on the quotes provided by bar chart, let's look at where we finished up our overnight trade on the corn. We go to that July contract, and we did have gains of 6 1/4 cents. So we were priced at 8.18 in the overnight trade, and December was up 3 1/4. Now we'll see if they hang on to that or not, like you mentioned. Soybean trade, well, we were 3 3/4 higher on July at 16.96 and November was 2.5 higher. Then on the wheat market overnight, well, we had Chicago gaining back quite a bit. July was up 11.5 cents. You had Kansas City wheat on the July contract up 7.5 cents overnight. Minneapolis wheat, we had July closing 9.5 cents higher in that Globex market. We'll come back and take a look at the beef and pork export sales in just a moment. Well, as I mentioned, we had export sales reported for the beef and the pork also last week. Let's take a look at what USDA reported this time around. On the beef side, well, this past week we had total sales of 11,500 tons. Now that includes 100 tons for the 2023 calendar year. Now, interesting here, that was down 24% from the previous week, down 34% from the 4-week average. China did buy 1,500 tons of U.S. beef, and Mexico bought 1,000 tons. Then if you look at the pork side, 31,500 tons. That was up quite a bit from the week before. And we had Mexico as a big buyer of U.S. pork, 21,600 tons. Absent from the list was China. They did not buy a thing. So what does that mean for the trade? And I'll remind you where we closed yesterday. Let's look at where we had the live cattle market on the close. Yesterday on the big board, we had everything down. June was down to 122 on the live cattle market. Feeders with the rally in the corn, we had May feeders going down 337. Look at August, down 420 yesterday. And the lean hogs have really been taking it on the chin. June down 82 cents again yesterday. So, Brian, do these export numbers, do you think they will change the market attitude today or not?
Well, in the case of the beef market, probably not. They're not real strong numbers, and we really need some positive news to help us rebound. The market is going to face some headwinds here with the corn market being higher, probably going to pressure the feeder cattle market initially, and that's dragging the live cattle market down as we saw yesterday. So if the corn market does start to fade, we'll see some buying interest return in the cattle and the feeders. You know, it's a real strong slaughter pace this week for that live cattle. And that, you know, that market is probably a little oversold, needs to go back and probably fill those gaps that were left at a bare minimum just because of the increased slaughter numbers that we're seeing this week. We're going to be in that 665 to 670,000 head kill range, and that is usually bullish for this cattle market. Meanwhile, the hog market kind of in a free fall. We took out the lows from the month of April, making new lows the last couple days. So this is a number that should be supportive and help us to rebound. Hog market really trading more technical than anything. I think, you know, if you can see and find some technical support to bounce off of, get some short covering going, you could have a pretty decent rally in that hog market just on you know, oversold conditions and that market being so oversold and ready for some sort of bounce.
All right, and the only danger there is that big head and shoulders formation that just jumps
right
off the page. All right, thank you. I appreciate it, Brian. You have a good trading day. Brian Hoops of Midwest Market Solutions with us here on a Thursday morning. We'll get underway with the trade at the bottom of the hour. Janet?